Hi, I'm Dominic Picardi here for Spreadbet magazine, and today I'm looking at one of the markets which I think could do especially well in 2013, and that is Germany's DAX index. And I'm pretty bullish on the outlook for shares generally around the developed world. I think that shares offer much better value than, say, government bonds, which I think are wildly overpriced and heading for a disaster. And stocks generally, though, are pretty cheap right now around the developed world, with the exception of the US. But some of the best value, in my opinion, is to be had in the Eurozone because at the moment, obviously, the valuations there are being held down by the fears over the very weak economic conditions and also the ongoing doubts over whether the single currency is actually going to survive. My belief is that the single currency will survive and that Europe will return slowly to economic growth. And this is partly due to the efforts of the European Central Bank, which is committed to keeping the euro intact and is going to use more of the sort of aggressive monetary tactics that we've seen deployed in the US and the UK. And as investors wake up to this reality, to the situation that is not as bad as they thought, European equities should continue their recovery. The German stock market is one of the more attractive ways to play this, in my opinion. I regard the German market as quite a high quality market. The market contains lots of economically sensitive industrial type firms that stand to benefit from an economic recovery and from also as investors regain their appetite for risk. And also, the German stock market tends to do well when the euro weakens, and I think the euro has to weaken in order for the currency to survive. But at the moment, the DAX is very cheap. This is another key attraction for me. It trades on around 11.5 times the average earnings of the last decade, and that's really quite cheap by historic standards. And this points to the market increasing going forwards, in my view. Now, how high is this index likely to go? And here we're looking at the monthly chart over the last 10 years or so, and for me, the obvious target is this region up here around 8,150. And we can see that in the market has twice got to this level and peaked. I don't see that happening again this time around. Back here in 2000, obviously the market suffered a major decline after it failed at that level. We got another very significant decline in 2007. So I certainly would expect a bit of hesitation, nervousness up here. When you approach a significant high like that, there often is a little bit of nervousness and hesitation on behalf of investors. But this time round, I think it's much more likely that we'll actually get not only to this level but through it, because first of all, the market probably won't be anything like as overbought and stretched as it was, say, here or here. But looking at long-term momentum, it's shown here on the monthly relative strength index. Also, the valuations are much more competitive than they were here or here. So I think this market is probably good to go not only to this level but also through it. And so I do not think we're going to see some sort of a third top, a triple top sort of pattern occurring. So really, then we have to switch to the daily chart in order to time our precise entry into short-term short-term purchases. And what I would be looking to do, I like to get in on pullbacks to around the moving average or short-term moving averages. This is a very neat and objective way of entering trades. This pink line here, this is the 13-day exponential moving average, one of the key measures for me of the short-term trend. And the sort of level that I would like to go long of the DAX is when the price pulls back to around this level, or probably a little bit through it, and then begins to rally once again, like here, when it crosses back through that average. That, to me, makes a nice logical entry point, a nice strong move, like the one that you can see here, or when it gaps up here, or maybe this one here. Those are the sort of moves. At the moment, the DAX is somewhat overbought on its daily chart, but that can be resolved with a bit of a pullback through this line, and then I would buy as the market starts to rally once more. As spread bettors, we don't need to worry about the risk of the euro, which I think is likely to weaken. As I've said, for long-term investors, that's obviously an issue if you're a sterling investor, because your profits on the DAX trade are likely to be somewhat eaten away by the weakening of the euro versus sterling that I'm expecting to occur. As spread bettors, of course, we don't have to concern ourselves with this. Anyway, I wish you all the best with your trading for 2013, and I'll update you soon.